Hey there, YouTube family. It's Stocks with Josh. Hit the like for me. Say hi in the comments section. It was sort of a slow day for me in the market. I didn't do a lot of trading. I did, though, drop a bag on one of our small cap stocks, SBET, S-B-E-T. I like the fact that despite all of the sell pressure that we've seen in the market over the last couple days, that it's still above its moving averages, which was bullish to me, and I decided to increase my position there. I took some profits on my SQQQ trade for some very specific reasons. I'm going to discuss those with you. I was able to cash out of that with a 21% profit. And what I saw on the day was a long-legged doji candle. That is a candle with a very small body, very tall wick, and a very long tail. And what it often means is indecision. What I would have needed to see for me to keep my SQQQ would have been just a great big green candle that started the day off and finished the day off. And it would have been pointing and with no wick on top. That would have told me keep it. But we had a day of indecision, and it gave me the indication that I would like to sell, see if I get a pullback. I'm by no means done with the SQQQ because I believe the markets are going to continue to be choppy. I believe there's absolutely risk to the downside. I just want to see if I can get a better price on it as it pulls back, and I saw an opportunity to take some profits, and it's never wrong to take some profits. Let's check out the heat maps. The stocks today were absolutely mixed. Tech was the worst performer of the S&P 500, and the energy and utility sectors were pretty much in the green. 3M and Salesforce were the dogs bringing the market down. They were the laggards in the Dow, while Walmart and Chevron were outperforming the rest. In crypto, the markets were relatively green. ETH Classic, and Uniswap were some of the big winners. I had kind of picked on ETH the day before, saying they had doubled down on going down. Well, they have doubled down on going up today, which was nice to see. And the dollar gave me the same candle that the SQQQ gave. And if you follow my channel, I reference the SQQQ and the dollar as sort of indicators for me to get a good sense of what's happening with the rest of the market. The dollar also gave me a long-legged doji candle, small body, tall wick, long tail. And it basically meant that the bulls and bears fought all day long with some pretty decent volume. Neither one of them won. It ended the day at a draw. So I wanted to talk with you guys briefly about the Skillz play that I brought to the table about a week ago. So when I brought this play to the family, it was simply because of the squeeze trades that we had been seeing in the market. We were at a market that was peaking, and we had a lot of companies that were just way over shorted. We had BYND, Beyond Meat. We had Laser, Luminar Technologies, LAZR, AMC, and of course the big boy of them all, BBBY, Bed Bath & Beyond. Those short squeezes were crazy profitable. They came out of nowhere, and they just caused the stocks to go screaming up. And so I was looking for other companies that could possibly squeeze, and I felt that Skillz might have had the opportunity to have squeezed, right? It had a beautiful consolidation period, and it had some momentum build up. And in addition to that, it was cheap. I knew a lot of people could afford it. They could afford to take a position in that could actually make a big difference. Some of these other companies, they're $20 a share. A lot of you may not have been able to get 1,000 shares and really see the value of the short squeeze. But a lot of people could afford to maybe get 1,000 shares of Skillz. And so I thought, you know what, let's give this one a shot. So on August 17th, I mentioned it when it was $1.75. And I said that we had a target price of selling it around $3.65 to $4, and that I was setting my stop loss at $1.65. So in a moment, I'm going to review the charts, but before I do, I just want to point out that we're in our final days of the really ideal offer from MooMoo, which is offering 13 stocks for opening up and fully funding an account. But the real deal lies in just putting in $100 where you get their best offer to date, which is 10 free stock. Each of those stocks could range from $3 to over $2,000. You spin a dial. And so even if you were just to get one at $2,000, that would be an incredible game changer for a lot of people to begin to have a new account with 2,000 fresh dollars to invest. That'd be a lot of fun. All right, we're going to basically go over Skillz, SKLZ. One of the first things I want to point out to you guys is we know this became very bearish when the 100-day moving average eventually broke beneath the 200-day moving average. That is a very bullish move, and you can see that the stock responded accordingly with a massive move down. And when these begin to fan out, that's also indicating to you that the bearish trend is going to continue. These fanned out, and they remained fanned out for a long time, allowing SKLZ to just continue to fall. Look how fanned out that is, right? But now, right around here, and this is what drew my attention to the stock, and specifically all the short squeezes we were seeing, and I knew that Skillz had a very, very high short interest because there was a lot of negativity surrounding the stock. There was, because of this consolidation right here, this period of sideways movement, I thought, you know, this might be a decent risk scenario to look at taking a small cap $1.50 stock. At the time it was $1.75 for a 100% move up if we got some sort of a short squeeze that would shoot us up and test for the first time this 200-day moving average, right? That's what we were hoping to see. But what I gave you guys was the stop loss of $1.65. I gave that to you guys because we were in at $1.75, right? And the stop loss at $1.65 would be right at this 15 EMA. Now, when this stock tried to break above the EMA, it got rejected, right? It stayed below and went lower. But when it eventually moved and broke above, that's when we got this larger move. So when it's above its moving average, that's typically when it's going to have a bullish trend. So we set it right at that moving average because we know that if it goes beneath the 15 EMA, we could see an extension of a downward trend. And we just didn't want to participate in that. We were willing to take our small 8% loss and just walk away, right? Because if we broke beneath this 15 EMA, the likelihood of a short squeeze would just really be greatly diminished and probably not happen. But the reason why we were willing to take risk on this stock is because of this period of consolidation. In addition to that, this bullish divergence on the RSI. Bullish divergence because the stock was moving down and sideways, but the RSI, which this represents selling and buying momentum, this selling momentum is everything beneath the 50. The middle point here is the 50. This is the 70%, and this is the 30%, okay? So when it's down here, the bears have control of it, but back here was the turning point, right? When it hit this low, that's when they had the most selling pressure. But even though the stock continued to go down and sideways, the selling pressure has consistently diminished, okay? Which means that the bears are slowly closing their positions and the bulls are slowly beginning to take positions, right? We're getting very close to this point in time that if we had a nice solid move above the 50, we could begin to get that larger break back up into the overbought territory, which would have happened if we had some form of a short squeeze. So the consolidation here, the bullish divergence on the RSI, those were the main reasons we got in. But the main point of this video is risk prevention. If once it broke that 15 EMA, there was no point in holding it because the move down could absolutely go to 80 cents and you would lose 50% of your total position. So if you dropped $2,000 on this, you would lose a full $1,000. It's just not worth it because we can just jump right back in if we get that momentum that continues to build like we hope, and it breaks back above the 15 EMA and the 100-day, then we'd be like, you know what? It's time to get back in. Stop trying to catch the bottom. Stop trying to be the guy that buys perfectly at the bottom. You're never going to be that guy. I'm not that guy. You know, let's use the charts to trade. We'll consider buying back into this if we get the break above the 15 and the 100-day EMA for the move that would exist here, okay? But when you get below those moving averages, you put yourself exposed to upwards to a 50% risk here. I don't want you guys to lose any money, so I'm taking the time to caution you and explain this trade a little bit deeper. Hopefully that helped. So I don't know if you guys have ever heard the number one rule in investing, and this is the number one rule. It's to cut your losses and let your winners run. And I traded for quite a while before I understood the value of that. The number one reason that I did not use stop losses for the longest time is that I just couldn't stand the idea of losing 8% per trade. And if I made a bad trade after a bad trade after a bad trade, I felt like, man, these losses are just going to add up and it's going to whittle away the little bit of money that I'm investing. And so it was very discouraging. So I didn't see it as an advantage. But the bottom line is that when I began to manage my risk, then that's when I began to make consistent money. You guys have heard me say it on this page before. The goal of the page is to make consistent profits. The bottom line is you want to take your losses before they get worse. And it's always the best strategy. And I try my best to get my book of disciplines out and write in there the story of what happened and what I learned. So I'm going to strongly advise you guys to consider taking losses and to use stop losses, especially on your swing trades. Successful investors accept this and they try to minimize their losses rather than avoid them. Selling a stock at a loss, you can basically get a tax credit, which is good, and selling the losers has another big advantage. You're not going to be reminded of your past mistakes every time you look at your exchange. There is a lot of psychology to sort through when investing. Investing will reveal fear, procrastination, greed, depression, every emotion in the book. Staring at a loss rather than cutting it can be the biggest mistake. But don't be rash. Before you liquidate a bad portfolio, leave it as is and come up with a trade that you have higher confidence in. Start off with the new discipline of putting in an 8% stop loss from this point forward. All right, then hit that subscribe and the notification bell if you enjoyed this video. And let me know, family, if you guys bought anything today and if you handled Skillz differently than I mentioned in the video, if you bought it and are holding it, or if you bought it and let the stop loss kick in, or if you think it's something that you might get back into. I will probably bring it up because I'm going to keep an eye on it for us all. As always, peace and blessings, my friends. I look forward to seeing you in the next video. Take care.